Assalamualaikum and very good morning. Today I want to present our group assignment. First of all, I want to introduce my group mate, which is myself, then Ilham bin Basri, Muhammad Syakir Asam bin Muhammad Siddiq, Nurul Syahsyadiana binti Abdullah, and the last one is Adam Hafni bin Abdul Halim. There are three types and various forms of business, which is the first one is sole proprietorship, company, and partnership. For sole proprietorship, it has six characteristics, which is ownership, administration, capital, management and control, liability, and profit or loss. For the first one, ownership. The business is owned by one person, which is the owner. The next one is registration. The owner must register the business under Companies Commission of Malaysia. The next one is capital. The capital of the business is contributed by the owner, only by the owner. The next one is management and control. The business is managed and controlled by the owner and their employee. For the next one is liability. This type of business is unlimited liability. And the last one is profit or loss. If the business earn the profit, the owner earn all profit made. And if the business lost, the owner must suffer all loss incurred. For the sole proprietorship, it has advantages and disadvantages. The advantages is less paperwork, registration is easy, fast and fewer documents are needed. The next one is unlimited liability, and the last one is simple administration or simple management, which is this type of business is easy to manage. And the last one is the advantages. The advantages in this type of business is the success of the business is limited by the ability or talent of the owner, difficulty in raising capital, and the last one is lack of continuity where the business does not contribute if the owner becomes deceased.
This is example of our business transaction. Encik Syakir started his business on 1st November 2020 named Dapur Kita Enterprise. His business sell a variety type of bread and cake. The business used the predict inventory system in recording the inventories. Below are the business transaction during the month of November 2020. For the first transaction is Encik Syakir contribute capital of 8,500 into the business bank account. He also brought in a van worth at 45,500 into the business. First of all, we must write this transaction into general journal, and for the ledger, we must write debit bank account 8,500 and credit capital 8,500. And also we must write debit bank and credit capital 45,500. For the second transaction is purchase inventory worth 2,000 ringgit by check. For this transaction, we must write into cash payment journal. And for the ledger, we must write debit purchase 2,000 ringgit and credit bank account 2,000 ringgit. For the third transaction is loan amounting to 10,000 ringgit was debit to the business account by ABC Bank. For this transaction, we must write into cash receipt journal. And for the ledger, we must write debit bank account 10,000 ringgit and credit loan ABC Bank. For the fourth transaction is purchase a dog mixer machine worth 5,000 ringgit by check. For this transaction, we must write into cash payment journal, and for the ledger, we must write debit dog mixer machine and credit bank account 5,000 ringgit. And for the last transaction is paid 500 ringgit by check for advertising expense. For this transaction, we must write into cash payment journal, and for the ledger, we must write debit advertising expense and credit 500 ringgit bank account. For document of this transaction is for the document for first transaction is cash memo. For the second transaction is payment voucher, and for the document for the third transaction is loan receipt, and the and document for fourth and fifth transaction is payment voucher. That's all for me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Syakir Ashraf bin Muhammad Sidek, and right now I'll be present to you about the accounting circle. First of all, in the accounting circle, there are primarily 7 stages. The first one is analyzing source documents. The second one is generalizing transactions. The third, posting to ledgers, preparing a trial balance, and then making year-end accounting adjustments, preparing a post-adjust trial balance, and lastly, preparing the financial statements. Steps 4, 5, and 6 have the preliminary towards the preparation of financial statements, which is the first stage of the accounting circles completing. On a worksheet, the work towards planning is best completed. Is the accounting circle start with the source of documents and end with the financial statement, as I mentioned earlier. Now, I will be present to you about the first 3 accounting circle. The first one is source of documents. The initial document that provides the specifics of a business transaction is called source document. The primary information about the transaction, such as the names of the parties involved, the sums paid if any, the date, and the content of the transaction, is recorded in this source of document. Source records are also marked with a unique number so that in the accounting system they can be separated. The source document is indexed for easier access and archived until the information in the source documents has been registered in the accounting system. In general, source of documents were used as evidence that record transaction actually occurred. When negotiating with their business partners, a source document is often used by business as proof, usually in terms of a payment.
Now, I am going to show you documents that are used in this business. Firstly is invoice. Invoice is a payment request sent by the suppliers that lists the goods or services provided to the buyer. Next is bank check. Is an authorization to draw funds from a bank account. As an example, paid utilities by check. Next is payment voucher. Payment voucher is a document used to approve the payment of a liability. Also act as an evidence of payment. Next is credit note. Credit note is a document sent by a seller to the buyer notifying them that a credit has been added to the customer's account for good returns. Other than that is debit note. Debit note is issued from a buyer to a seller to indicate or request a return of funds due to incorrect or damaged goods. Next is salary slip. Salary slip, also known as payslip, is a document issued monthly by an employer to its employees when salary are given. Lastly is cash memo. Cash memo is a documentation for for cash transaction, also used when drawings are made.
The second one is journals, journal entries. The next step with the transactions set in place is to document these entries in chronological order in the company journal. When one or more accounts are debited and one or more accounts are paid, debits and credits must always be balanced. The transactions were manually entered into a report before computerized bookkeeping and accounting, and then posted to the general ledger. Apart from the general journal, accountants kept numerous other journals including transaction and sales journal, cash receipt journals, and cash disbursement journal. Today, you are likely to find only a general journal with accounting software in which change entries and special financial transactions are entered.
Journals. They have two types, which is general journal and specialized journal. Under specialized journals, there are 6 types of it, which is sales journal, cash receipt journal, purchase journal, cash payment journal, sales return journal, and also purchase return journal. General journal. General journal records transaction other than credit transaction. As an example, non-current asset purchase, depreciation, and also sales. Next is specialized journal. Sales journal. A sales journal is a subsidiary ledger used to store detailed sales transaction. It only records credit sale, which is account receivables. Sales made in cash are not recorded here. Next is cash receipt journal. This is where cash sales are recorded or any cash transaction such as payment from account receivable. Next is purchase journal. Only purchase that was made by credit are recorded in this journal. They are called accounts payable. Next is cash payment journal. This record cash transactions such as cash purchase and payments made to account payable. Lastly is return journal. Sales return journal records goods returns that was made by account receivable. Meanwhile, purchase return journal records good returns that was made by the business. Thank you.
The third one is ledgers. Posting to the general ledger. The journal entries are then posted to the general ledger where you can see a list of all transactions on individual accounts. Ledger is a book that consists tons of accounts in which debits and credits are posted as the confidential and summarized information from the papers. It is also called the second entry book. The ledger includes the details needed for financial statements to be prepared. It includes asset accounts, liabilities, equity of the shareholders, revenues, and expenses. This full list of accounts is referred to as the accounts table. Any active account on the list is represented by the ledger. That's all for me. Thank you.
My name is Adam Afni and I will continue the presentation of the accounting cycle. For the next accounting cycle is trial balance. A trial balance is a list of all the general ledger accounts closing balance made at the end of the business accounting period. It is also the first step in making the financial statements later on the cycle. Trial balance is prepared to determine the precision of the previous accounting cycle, which is journals and ledgers. Then the closing balance must be inserted to the respective columns based on their entries, which is debit and credit. So there might be two outcomes for the calculation in trial balance. The first one is where the totals of both debit and credit columns are equal, which means the entries made in the previous accounting cycle is correct. Another one is where the totals of both debit and credit columns are not equal, which means the entry made in the previous accounting cycle has at least an error. So the error made must be corrected. This is an example of a complete trial balance. This is an example for our works. So as you can see, there are debit and credit columns. When we calculate the debit columns and the credit ones, we get an equal balance at the end. Finally, the last accounting cycle is financial statements. A financial statement consists of a statement of profit or loss and a statement of financial position. The financial statement is made at the final stage after adjusting necessary errors. For us, there is no errors occur during the transaction, so we can just proceed to the financial statements. The statement of profit or loss can be defined as an income statement. It measures the business revenues and expenses occurred during the period. Simply, it tells whether the business made more money or less money than expected. The statement of financial statement can be defined as the summary of the assets, liabilities, and owner's equities of a business. In consideration of periodicity concept, only the exact year business financial transaction will be calculated in both of the statements. This is example for our statement of profit or loss and statement of financial position. For our profit or loss, after the calculation, we get net loss. Then the net loss is moved to the owner's equity to calculate. And that's all. Thank you.